Welcome to TradeTheNBI.com. This is John's report. It's for the 31st of May, and well, we're going to end the month here, and pretty close to even when you consider where we started the month. Right here at the beginning was around 41.44, and we're in a little bit of a decay here in the pre-market, but we had exceeded that. So for most of the month, everything was extremely underwater, but late month buying has lifted things up, and you can see with that magenta leading. Now the critical element becomes the first pivot lower, and then if that pivot is able to dip down below 33, so there's quite a bit of a cushion there at this particular stage, which gives plenty of time for the market to handle a little bit of retrace back, and you can see we're almost at positive extremes in the yellow, so there's potential for the fill back of all of those yellow, but that's less predictable and usually takes a little bit longer, but oftentimes they still do. They were close to getting to an extreme point from an algo standpoint, but that just means that it was much more broad-based from a rally standpoint that allowed it to continue. Still, that looks where we are for the year, going back to the beginning. If we shrink that back, it's roughly the current market return for the year, and it's been easy enough for us to see it. From an NQ standpoint, almost identical. The DOC is not quite as strong on the NASDAQ as it is on the S&P, and you had fewer of the yellow positive extremes. So again, moving back towards the 23, and of course above the 38, same with the ES or the S&P. Breaking above those, that becomes the strength, so we'll see if the normal hours return. If buyers are still interested, but there's still some troubling elements on there. Of course, the Euro's had this nice bounce, which helps the S&P as well, and it just doesn't seem like there's going to be any justification to hold on to these levels, given what we're seeing from oil prices and their continued climb. You can see gold is kind of stuck, and we talked about why that is, because of the potential future deflationary pressures, but that could be premature in their thinking on that, because look at that 118 on oil, and that is going to start to get towards a crippling element, particularly when we talked about this way back when this first run happened. You get into that 125 range between there, and anything goes as far as move higher, how crippling that will be in certain aspects of the U.S. economy as well as worldwide. With supply limitations, this is going to be an interesting summer, and how that will impact people's abilities to travel, move around, do things. It's going to be severely impacted. But again, from a Fed standpoint, it does draw out a lot of excess liquidity from the marketplace, and that is kind of what they're looking for. And you can see that TLT here, the continued rises, a lot of people still shifting towards treasuries at these higher yields, expecting the Fed will ease. No one really believes the Fed is going to hold on to this tightening, particularly since they think that further erosion in the economic numbers will force them to do an about face. Positive comments coming from Russia on that, on potentially using Bitcoin in that as an exchange, just to counter sanction things. I don't see how that's going to work very effectively for them. It's pretty transparent, so it doesn't really meet their need from that standpoint, but that was enough to really give it a jolt, pushed it back up over that 30K number, which was important because it kept holding on just right below it, and it gets us right back in that range of 31 to 38,000 comfort zone, so to speak, because it was looking a little bit scary once we dipped down to fill that last positive extreme around the 28K range. That really left things uncertain until there was pretty strong buyback at that level. It became pretty strong support, because below there, you were looking at dropping all the way into the low 20 at best. From an ETH standpoint, again, that rise came up, and then a little bit of softness here, filling back a lot of these positive extremes that took place. A little bit further to go with that. There's one that's just a little bit lower at 1948. And from an ES standpoint, of course, those longs took it a little bit close out and repeated the same process again. no shock on that. Here it is post-market for the 5K and the current dip in, again, we can just go back to the start of these positive extremes right there that filled past those, which means all of these other ones got filled as well. And that's, well, holiday action. And you can see it was mostly bullish from that standpoint. It's easy to manipulate. Again, forces some short covering in that. But going back into previous week, we had that nice run up and it was all pretty clean. So it was pretty straightforward. So I would think that starting here in May, we really got the major test beginning, and below that 50%, unable to get over it in the next couple of days. I would expect to return minimum to the 23% and potentially significantly lower. So, as always, though, I will continue to update you. Trade well. Look for me on Skype chat. Indicator renewals are going to be going out in a little while, so be all set for that. As always, talk to you later.